Hey, this is John Starks. We down here on the street, and you watching Taking Stock.
Let's do it, folks. 2 minutes to go here into the close for a wild day here on Wall Street with plenty of whiplash and plenty of reversals. The tail of the tape, we are expecting fresh all-time highs for the Russell 2000 as the small caps continue to surge. What a huge reversal we had across the major market indexes. We were high, and then we started pairing off those gains. And then at 2:28 p.m., just a short time ago, from the ground in Davos, Switzerland, the president taking to social media to say, based on a very productive meeting I've had with the Secretary General of NATO, we have formed the framework of a future deal with respect to Greenland. President Trump going on to say, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. And that is music to the ears of market participants who had been skittish over the state of ongoing trade policy and tough talk out of this White House on our key trading partners around the world. All 11 sectors of the S&P 500 expected to finish in positive territory. Energy, materials, and technology stocks all leading the way. Welcome to the show, one and all. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away, my friends, from the ringing of the iconic closing bell down here on the trading floor of the New York Stock Exchange. After this huge reversal kind of pushed forward by the president on social media within the last hour and a half or so, the S&P 500 expected to finish up more than 1% after yesterday's 2% sell-off. Comparable story for the Dow, the New York Stock Exchange Composite Index, and of course, the small caps once again expected to reach an all-time high. The great Chris Versace's on deck. He'll join us right after the bell for his take on today's price action, Netflix earnings, and much more. But for now, time for the close. And just one day after the S&P 500 falling 2% here on Wall Street in yesterday's session, what a comeback. Don't call it a comeback, or we're so back, as the kids like to say. Final tail of the tape for this Wednesday, January 21st. The S&P 500 will finish up 1.1%. The Dow 1.2, I believe that says. The NYSE Composite Index up more than 1%, and the small caps up 2% clean for a fresh all-time high. Also catching a bit here today, the banks led by Amex, the fintech stocks led by PayPal, the home builders led by Toll Brothers, as well as industrials led by John Deere. Let's bring in the great Chris Versace, good friend of ours here on the show. He is the CIO at Tematica Research. Thank you for being here as always.
Always happy to visit you when I'm on the floor, JD.
Holy cow, we had planned for one show in the 2 o'clock hour. The president had something else in store by the time we hit 2:30. What are you seeing in the markets this week?
This week, I mean, I got to be honest with you. Our message out to the subscribers at the Street Pro was Monday morning, let's hang tight. Let's not do anything rash. We know Trump is speaking at Davos. He's given us some tough talk, as you pointed out, but he tends to walk these things back. We expected that this morning, didn't quite get it, but as you pointed out too, right around 2:30, he did, off like a rocket, and compared to Friday, not much has happened.
Yeah, the president this morning also said, for whatever it's worth, the United States will not take Greenland using military force.
Correct.
Not a sentence I ever thought I would say on television. Any other big takeaways from the president's remarks? They went on for well over an hour this morning in Switzerland.
Yes. They were a bit random. I'll try to be a little more cogent in my summary. He was highlighting, of course, all that he has accomplished in the first year. I disagree with the comment that we've beaten inflation. I think we'll get some data later in the week that will say otherwise. But by and large, it was a victory lap. And I think he made his point of, hey, NATO, you need me. And that, I think, ultimately led to what we saw this afternoon with this framework, whatever the framework is.
Yeah, still very light on details, as is oftentimes the case. We don't know exactly who it will involve, how this thing plays out, a projected timeline.
Right,
we have no idea, but at least tariffs for now kind of seem like they're off the table. I think that's what market participants wanted to hear.
Agreed.
Let me ask you about Netflix earnings.
Yep.
I mean, caught in the crosshairs here with this Warner Brothers Discovery saga, which is itself a wild saga. What do we learn from Netflix?
You know, it's funny. I had a meeting today, and someone said to me, it's not over yet. There is another chapter in this drama, so I'm kind of sitting on the sidelines waiting to see what happens. Maybe Netflix actually walks away the winner, maybe not, is kind of what I've heard. But as far as Netflix's earnings, kind of interesting, right? You know, a little softer guidance, suspending the buyback. They need cash to fund the buyout. That's all good. But to me, I need to wait and see as an investor, given the slide that we saw in Netflix shares, are they worth buying? And I'm not going to know until we find out, do they have the deal? What are the synergies? What are the cost savings? And I joked with you earlier about this. I'm not anxious for a repeat of AOL Time Warner.
Sure.
So I need to know more.
What do you see in the broader ad revenue space, and anyone you think might be particularly vulnerable? As we did hear a bit of update on guidance from Netflix on that end.
This is a great question. So, Netflix said that their ad revenue is going to double in 2026. Meta also said today that they are going to move advertising all across threads. This to me says we're going to see greater competition in the digital advertising space. I think it's going to be a big headwind for Trade Desk.
While I have you, Friday's flash PMI, you're looking for a Goldilocks zone, 51 to 53, potential expansion. What are you looking for that'll tell you more at the end of the week?
So the headline numbers will probably be fine. I'm not worried about them. I am going to be focused more on what's the inflation commentary, and of course, what are we seeing on job creation? We know the Fed is keyed into that. If we see a positive number, the economy is rolling. If those numbers are rolling over, the market could kind of revisit rate cut expectations. Fed isn't expected to do anything until the middle of the year. We have a few meetings before that.
We also have PCE print. You mentioned an inflation print earlier in the interview. We'll get Friday. What's on your horizon, knowing how important that particular piece of data is to a very data-dependent Federal Reserve?
We got the meeting coming up. I don't think they're going to be doing anything. But to the extent that it is in line with recent months, maybe trends a little higher, that would not be a good thing. Do we get a surprise to the downside? That's what I'll be looking for. I don't think we're going to get it.
The great Chris Versace, CIO at Tematica Research. Thank you for being here. As always, safe travels and enjoy the big blizzard.
That's right. Get ready to dig out.
Sources familiar with the situation say we could have a lot of shoveling
2
in
feet.
our future. 2 feet.
2
Sunday,
feet.
Monday, Saturday. We'll see what happens. Thanks for being here, brother. Nice to see you as well.
Anytime.
Tyler will take your mic. Jeff, you're not going to head this one. Wow, Broadway is clear for us. Thank you very much, everyone. All right, time now to get you quickly caught up on what happened with the team from Johnson & Johnson reporting quarterly results earlier this morning. A beat on revenue and a miss on earnings, but mixed news overall, driving the stock much lower earlier in the session, then kind of bringing back some of those gains into the close. Pardon me, gentlemen. First off, the company announced an adjusted EPS of $2.46 a share, in line with expectations. Did give us a very optimistic outlook on the state of sales projections for 2026, but the company is embroiled in ongoing litigations over talc powder being linked with various cancers and some uncertainty over profit margins after that big prescription drug announcement involving the Trump administration had been down as much as 2% earlier today. Got back some of those gains into the close. Shares of Johnson & Johnson up 5.5% so far here in 2026. Jeff, we'll take a look at one NYSE notable before we toss to break. How about ExxonMobil up 2.4%, reaching a fresh all-time high of 133.70 today, now up for 5 consecutive days in a row. Analysts from UBS reiterating their buy rating on the stock with a price target of 145. They point to the strength of their global refining operations of 4 million barrels a day across 15 different refineries worldwide. Shares are up already 10% so far here in 2026. ExxonMobil set to report quarterly results coming up January 30th. All right, Cheddar's very own Chris Castellino is now back with part 2 of his ongoing deep dive into the latest in auto tech from CES 2026 in Las Vegas, Nevada. Take a look.
If you think Afeela is advanced, wait until you see what Tensor is building. The Silicon Valley startup just unveiled what they're calling the world's first personal robot car, a level 4 fully autonomous vehicle designed not for taxi fleets, but for your garage.
It's also the very first dual mode car, which we believe is really important for personal robocars because sometimes you want to be driven in level 4 and sometimes you want to drive.
That dual mode design includes a foldable steering wheel, developed in partnership with Autoliv. When you want to drive, it appears. When you want to be driven, it collapses and disappears, transforming the cabin into a passenger lounge. But what really sets the Tensor apart is what's under the hood, or more accurately, what's computing.
This is the world's first AI agentic vehicle. It also has the world's largest supercomputer on board in a vehicle, 8,000 TOPS of processing power, NVIDIA Thor drive chips, 8 of them in the car. It is able to process and reason. It has 5 LiDAR, 11 radar, and 37 cameras, all working in harmony.
To put that into perspective, Tensor's onboard computer streams and processes over 53 gigabytes of sensor data per second. roughly 1,000 times faster than typical home internet. All of that data feeds into what the company calls the Tensor Foundation model, an AI system that doesn't just follow rules, it learns.
We've been in this business for 10 years. We've had lots of experience. This particular vehicle, we came out of stealth. It was developed 6 years ago. We launched it in August. So I would say almost a decade of training and learning and making sure that this car is purpose-built and safe. Our car was engineered specifically for personal ownership, which means all of our sensors are self-cleaning, self-managing. Our tires are able to run flat at 45 miles an hour up to an hour to get itself to a safe place. We have a primary, secondary, and safety driver, so if we get to the safety driver, it finds a place to pull over.
And perhaps the most intriguing announcement, Tensor has partnered with Lyft. The rideshare company has reserved hundreds of Tensor robocars and plans to make every personally owned Tensor Lyft ready right from the factory.
It's a really exciting opportunity also for owners of Tensors because all of our cars will come off the assembly line Lyft enabled, which means rideshare enabled. So for the first time, your car can actually go work for you when you're not in it.
Imagine sending your car to make money as a robotaxi while you're at work or asleep. That's the future Tensor is betting on. The robocar is slated for production by the end of 2026, launching in the US, Europe, and the Middle East. And while pricing hasn't been announced, expect it to be firmly set in the luxury segment. The future of mobility isn't simply about getting from point A to point B anymore. Car makers are now focused on scaling autonomous, intelligent, and conversational technology. Are you ready for the ride? For Cheddar, I'm Chris Castellino.
Let's do it. Welcome back to the show. You're watching Taking Stock live from the New York Stock Exchange. Time now for a few headlines in the worlds of fintech, crypto, and artificial intelligence for your afternoon. First up, the crypto majors all up big after today's big reversal for equities. Go along with them, Bitcoin up 2% at this hour, ETH up 3.2%, and Solana up 3.4%. Next up, Treasury Secretary Scott Bessent reaffirming the administration's digital asset push, including moving forward with a strategic Bitcoin reserve and a more friendly crypto regulatory framework. And finally at this hour, clinical AI company ADOC securing FDA clearance for the industry's first comprehensive AI triage system designed to flag critical findings earlier, as well as ease emergency department crowding and imaging backlogs. Joining me now down here on the trading floor is the Chief Financial Officer, of ADOC, Arvind Kadaba. Welcome and congratulations. What a cool story and announcement today.
Thanks a lot, JD. I really appreciate it. Thanks for having me today.
Talk to me a bit more about the key details of that big announcement we just
Sure.
brought our viewers. What do you most want people to know about it?
Absolutely. Let me maybe start with a quick introduction on what ADOC does. We build image recognition AI algorithms for hospitals and health systems to be able to diagnose acute findings, something that's life-threatening, and have a platform that's designed to take a patient with that finding and get them the right care within the hospital. And what we've been able to do is completely change the game in terms of what AI can do and how quickly we can build AI. And that's what we're announcing today. Not only have we created a model that's the most accurate clinical medical image foundation model in the world, we've built, in partnership with the FDA, a regulatory pathway to be able to get that model and get all disease coverage built on that model successfully cleared. Historically, the FDA used to clear AI model by model, one disease. And now, one model can cover potentially dozens of diseases. And that's a powerful way for companies like ADOC to accelerate AI and accelerate the impact that AI can have throughout healthcare.
Yeah, congrats on the big announcement. Arvind,
Thanks,
what do you think this most means for emergency departments, people directly on the front lines or working in ERs around the country that may most rely on this type of newly emerging tech?
That's a great question, JD. And I think for emergency departments that are suffering significant backlogs and have to turn away patients without being seen, this meaningfully accelerates their efficiency and their ability to drive throughput and improve medical quality, as well as physician productivity, to be able to ensure that patients get the right care at the right time.
Talk to me a bit powered by single foundation model. What does that actually mean in theory, and what does that mean now in practice?
What a foundation model for medical images can do is one model can now cover dozens of diseases. So for us, we've built a model powered by petabytes of medical image data that can now cover, again, dozens of diseases and get that cleared by the FDA simultaneously. And what that allows companies like ADOC to do is meaningfully expand the amount of disease coverage. And so more Americans can get the right care at the right time.
What does FDA clearance actually validate overall?
Sure. It validates the accuracy and quality of the model itself, JD. So now what the FDA is telling us is that our model is now clinical grade. Doctors, physicians can use this model in practice, in the workflow, to drive improved patient care and faster throughput.
It sounds like the tech you're leveraging is changing by the day. And I'd imagine a firm like yours is seemingly moving 100 miles an hour. Give me some sense about what even the rest of Q1 looks like in 2026 and the rest of the year as well.
Absolutely. We are moving 100 miles an hour, and for a company like ADOC, our mission and vision is to increase that disease coverage as quickly as possible. And our goal over the next couple of years is to go from 11 diseases built on our foundation model to potentially hundreds.
Wow.
And think about the transformation that can affect for healthcare around the world.
Arvind, what most excites you about where the technology is now, or what gives you most optimism about where you most hope or suspect the technology can be tomorrow?
Oh, that's an excellent question. I think what gives me a lot of hope and optimism is that, from a couple of years ago, we've taken what was, an R&D project and turned it into reality and gotten that cleared by the FDA. And now with the paradigm shift we've been able to build together with the regulator, I think we can 10x this and hopefully continue to drive growth in the market, increased AI adoption, and improved care for millions of patients in America and around the world.
Is there anything, Arvind, with regards to regulatory framework that you think still needs to be adapted, changed, anything in the space for policymakers or lawmakers down in Washington, D.C. to look at, or you feel like the existing kind of rules of the road right now are for the most part, pretty suitable?
I think, from a policymaking perspective, I think this is a transformational shift in terms of the ability to accelerate AI, and I'm very encouraged by the progress made thus far, and I'm excited to see what can come.
Arvind Kadaba is the Chief Financial Officer at ADOC. Congratulations, huge announcement on the day, and you came here on Taking Stock to talk with us all about it. Great to have you.
Thanks, JD. Great to be here.
Come back on the show anytime. Congrats again. Folks, don't go anywhere. We got much more Taking Stock coming up live from the New York Stock Exchange right after this. All right, let's do it. Welcome back to the show. Time now for the latest headlines in the world of startups, raises, and rounds that you need for your Friday afternoon, my man. All right, first up. US drone startup Zipline raising $600 million at a $7.6 billion valuation as investors bet big on autonomous last mile delivery across food, retail, as well as healthcare. Next up, AI startup Humans and raising an eye-popping $480 million in a seed round, valuing the company at about $4.5 billion. And finally, Alibaba-backed Moonshot AI seeing its valuation jump by $500 million to almost $4.8 billion, all things considered. This as investor appetite surges following strong Hong Kong IPOs from rival Chinese AI firms. All right, time now to talk to our third and final guest, but certainly not our least guest of the show. Just rang the closing bell, Frank Kugelmeyer, Discover Boating and NY Boat Show president and CEO. Welcome to the show.
Hey JD, it's great to be here, and let's talk boats. We got one of the best boat shows in the world right here, going off starting today, and it goes through Sunday right here at the Javits Center.
And so it's right here in New York City for everyone who is looking. First of all, what a time of year here in New York when it is so cold, and we're expecting this huge snowstorm to come through to celebrate all things boats. What most excites you about the show here at the Javits Center?
Well, everything in the show excites me. This is the oldest boat show in North America. It started in 1905. They used to bring the boats up Broadway by horse and buggy carriage, and now here you are seeing the best technology, the most advanced automated technology. You're seeing AI start to move into boats. You've got the widest variety of boats and styles for families and sport fishermen in the New York region that you can possibly find any time of the year at the best prices.
New trends, top innovations here in 2026. In what ways, Frank, do you see the space continue to evolve, given it does have, as a hobby, such legacy with so many people?
Well, you're now seeing self-docking, you're seeing autonomous systems being built in, you've got fantastic navigation. All of the great technologies you see in auto have transferred and migrated into the boat community, and it's made it more accessible for anyone, even if you've never been on a boat or know how to drive it, you now can. It's made it more accessible than ever before for people who have not been in the sport.
Would you recommend someone who maybe doesn't have a ton of experience with boats to still check out something like a boat show here in New York City? I got to imagine, first of all, you see these things up close and personal, and they're huge and they're awesome. But what a great learning experience as well.
It is. You can talk to the experts in the industry. A lot of the manufacturer representatives are right here at the show. You can learn a lot about boating. You can learn about how to get started boating. The best place to do that is go to discoverboating.com, which is Discover Boating New York Boat Show. And it's got everything you need to know about getting into the lifestyle and where to go. And you can also go to your local boat club, rental club. We're seeing a lot of people move into that part of the market, and that's introducing more and more people into the best activity you could possibly do.
This might be an impossible question. Do you have a favorite boat?
I do, but
Are you allowed to say if you have a favorite boat?
I do, but I have to love all of my boat builders equally.
That's the right answer. Correct, fair enough. State of the consumer market for recreational boating. What have you seen right now? I'd imagine this is the type of activity. You probably saw a big surge during the pandemic. Stuck at home, quarantine, everyone wanted to get out of the house. What has the post-pandemic marketplace looked like?
We did. We came off of a high, and that was historic highs. And so we did see a normalization during that period. This past year, the uncertainty that was in the marketplace that impacted all spending, you sort of saw a wait and see investment in the consumer market. But we're right now in the early boat shows that are happening right now, that are in January and February, the biggest in Miami, which is our other big boat show, as well as others around the country. We're seeing signs of real energy in the consumer. And when we see energy in the consumer, we see energized boat sales.
How about growth overall for things like boat clubs and rentals? Just people really just trying to learn about the space in general.
Yeah, well, with new consumers coming into the marketplace, we have seen double-digit growth in the rental market and the sharing economy. That's fantastic because in all of the recreational sectors, that tends to be a great indicator and leading indicator. Once you start and test a boat or try a boat, you move into ownership.
Frank Hugelmeyer, Discover Boating and New York Boat Show president and CEO. Have a great week for that. You know, this is the perfect time of year here in New York to get into this, because you see these things, you're like, I'm dreaming of warmer weather. Get me down to the Florida Keys on one of these big, beautiful boats. It's awesome.
It is, and it's the best boat show in the whole metro region, so come on down.
Frank, thanks for being here. It's really good to have you. Folks, don't go anywhere. Much more Taking Stock coming after a quick break, including the latest from Scarlett Sieber at Money 2020. More Taking Stock after this.
Hello again, I am Scarlett Sieber from Money 2020, and we're going to do a segment about Who the F Knows 2026 predictions. Today's prediction comes from Cheryl Chen, our head of content for Money 2020 Asia. Cheryl says that in 26 we'll see the rise of community finance orchestrators. What does that mean? She's talking about AI-powered infrastructure combined with hyper-local human touchpoints to create sustainable, trust-based financial ecosystems. That's a lot of words in one sentence, my dear. According to Cheryl, successful fintechs will go beyond pure digital plays and become orchestrators, adapting to each community's unique cultural and economic context. All right, Cheryl, I love this idea. It's innovative, it's human-centric, of course it is, and it's exactly what fintech needs to build trust and sustainability. Here's the reality check, though. Can fintechs really pull this off by 26? I have to call this one a bounce it for now. Why? Because while the concept is brilliant, and it really is, Cheryl, it's also incredibly complex. Building hyper-local ecosystems require deep cultural understanding, adaptable infrastructure, and let's be honest, a lot of time and resources. Most fintechs are still laser-focused on scaling their digital offerings, and the numbers back it up. Global fintech funding fell 48% in 23 compared to 22, and most of that capital is going into core tech and compliance, not necessarily community orchestration. Meanwhile, AI adoption in financial services is growing fast. It's actually expected to hit $64 billion by 2030, but using it to build hyper-local trust networks, that's still in the experiential phase. So, Cheryl, love the vision, sister, but I think this one is ahead of its time. My verdict, bounce it for now, but keep an eye on it. If fintechs start blending AI with cultural intelligence and local partnerships, this could be a game changer down the road. What do you all think? Are fintechs ready to become community finance orchestrators, or is this just wishful thinking? Drop your thoughts, and don't forget to check out the rest of our Who the F Knows 26 predictions at money2020.com, because in fintech, the only sure bet is that nothing is guaranteed. See you next time.
Tomorrow morning here on Wall Street, we'll get the first look at Q3 GDP. That crosses the wire at 8:30 a.m. We'll also get initial and continuing jobless claims before market open tomorrow as well. Plus PCE inflation print crossing the wires at 10 a.m. That is, of course, delayed from the month of November given the historically long government shutdown. Lots of earnings on tap as well. Tomorrow morning, GE Aerospace plus Procter & Gamble. That's a key Dow Jones Industrial Average stock as well. And in the afternoon, Intel and Capital One. That's going to do it for today's edition of Taking Stock, Boat Edition. Have a great night. We'll see you again tomorrow.